Hello, welcome to Any Answers Answered. This time we're going to have a look as we approach July and we look towards the P11D filing deadline. A couple of things to do with benefits. We start with a question from Supersonic Saint, which is, when are business meals staff entertaining on PSA? Very simply, I'm trying to work out when business meals and drinks become employee entertaining and should be included on our PSA. Clearly a generous employer who's going to sort the national insurance out on their behalf. Some are completely obvious, but I'm not sure about some of these. For example, directors board meeting at a restaurant, drinks for staff attending a business awards night, team lunch at a pub for a work update, marketing management meeting to decide budget, lunch at pub. Apart from wanting to work for this business, because it sounds like it's quite fun, what's the rule, Tim?
Well, first we should remind viewers that a PSA is a PAYE settlement agreement under which the employer can meet the tax and, as you say, the national insurance contribution costs, both primary and secondary, of the benefits that would otherwise have had to go through the payroll or be on a P11D. And the answer is given very neatly by Matrix, who says, and I agree with him or her, they would all be staff entertaining and as such would go on the PSA if they're not going on P11Ds. Goes on to say, if the staff costs were ancillary to entertaining clients, then it would all be business entertaining. But of course, the ones that you listed there are not ancillary to entertaining clients. And yeah, looks like staff entertaining, which will be taxable.
One of the things to always be very careful of with this idea of ancillary to entertaining is that if you take 15 staff to a rugby match and one client, arguing this is all ancillary to the entertainment of that one client is always quite difficult. You've got to get the balance right,
yes,
haven't
exactly,
you, I think, in those things. But yeah, as you say, quite a simple one, that if it is staff entertaining, it's one thing. Entertaining a client has to be involved before we can start to argue it isn't going to be an issue.
One of the other posters, Accountant A, does further confirm, it's my understanding that food and drink provided to employees and directors is taxable absent some reason why it isn't, e.g. subsistence on a business trip. And of course, as directors of PTP Limited, you and I incur various expenses on food and drink, but in the course of our work for PTP Limited, so if we're travelling to a client to do a lecture, then that sort of subsistence cost does not give rise to any benefit in kind charge on us.
Yeah, absolutely. The second question is also relevant in terms of P11Ds and what have you, and it's to do with something that we had talked about actually when we get these shown to us by people at accountingWEB. They often say, oh, well, we thought you'd like this because we know you talk about this quite a lot in lectures. In fact, we talk about something slightly different to this in lectures. The question is an anonymous question, and it is as follows. I'm just after a bit of advice re P11Ds. Company purchased some vouchers for employees as part of a benefit scheme. The employees got vouchers based on a percentage of their salary, but the company got a discount due to the bulk purchase. Do I put the value of the vouchers or the cost to the company? The discount is small, but I want to get it right.
And the answer is the cost to the company. And apart from those benefits where there's a statutory method of calculating the benefit, like company cars, accommodation, loans, it is the fundamental principle, cost to the company. And of course, Pepper and Hart, the well-known case involving the Malvern College schoolmaster, established that it is marginal cost to the company, not any other form of calculated cost. So in a case like this, if they're providing vouchers with a face value of £1,000, but the employer has only had to pay £900, they've had a 10% discount, the benefit in kind is indeed the £900 discounted price that has been paid by the employer.
And this is quite a common way of remunerating, or part of a way of remunerating, people who work for large retail chains. We'll give you some vouchers to spend in store. The cost to employer is considerably less than the cost if I were to walk into those shops and buy it. Just to confirm, vouchers that are available to an employee, or rather gift cards that are available to an employee.
Oh, yes.
If you were to provide somebody with a gift card of £50, my problem with this is, number one, it says voucher. Number two, it says as part of their salary package. The whole trivial benefit rule is a very different rule. We should just
It
very
is
quickly
indeed.
say.
The trivial benefit rule that came in last year allows employers to provide trivial benefits, and that means costing no more than 50 quid per go, without having to put them through P11Ds, etc. There is the very strict condition, though, is that the benefit, the trivial benefit, like a Costa Coffee gift card for 50 quid, that trivial benefit must not be recognition of services, so it's not employment remuneration. And then a further point is that if the recipient of the trivial benefits is a director of a closed company, there is an annual limit of £300 on the trivial benefits that can be provided.
But the reason a voucher won't work is because it can't be something that's convertible into cash.
Absolutely right. And another point on trivial benefits is that they mustn't be convertible to cash. So vouchers, which could convert to cash, it depends on the terms, might not qualify.
Okay. But as far as this one's concerned, it is cost to employer principle, not to be confused with trivial benefits, which mustn't relate to work done, mustn't be in a form that can be converted into cash, but otherwise can be a very nice benefit to consider. Good luck with your P11Ds, and join us next time for some more questions which we will try to answer for you. Bye-bye.